Foster Wheeler, incredible decline today. What to think? Little perspective, we first recommended the stock October of 2005 at $15. Recommended it as a green stock April 16th of 2007 at $34. It's been a huge winner for us, but it was the largest decliner today of the major stocks that I follow, and it had a monumental earnings miss. I own it for my charitable trust, ActionAlertsPlus.com. I was up nicely until today. In full disclosure, I bought some into the weakness, but you know what? Maybe I was foolish. Maybe I'm premature. Let's find out. On the line right now is someone I regard as a friend of the show, but when we lose a lot of money, are we about friends? Well, let's find out. Ray Milkovich is the chairman and CEO of Foster Wheeler. Ray, welcome back to the show.
Thanks for having us, Jim.
Okay, Ray. I'm someone who follows stocks for a long time. When I know that a company is expected to earn roughly 76 cents and it reports 56 cents, that's a major material difference from what was supposed to be reported. Why did you not pre-announce that you were going to have a bad quarter?
Well, Jim, we didn't pre-announce the quarter only because our policy has been, as I think you know, that we don't provide specific guidance for performance periods. And that's the reason we didn't do that.
Okay. Can you explain why the market, given that your revenues were very strong, the market has taken you to the woodshed? And do you think that maybe you deserve it, given that the street was looking for something, and even though it wasn't your guidance, you obviously were well off what the street was looking for?
Well, Jim, here's the way we look at today. I mean, it can't be a good day if we trade down over $11 a share. And we expect complete accountability for that. I mean, we announced what was a simply outstanding 2007, but let's face it, our fourth quarter was not as good and materially off what the street expected and the average of the first three quarters. Now, we explained the fourth quarter on the call in what we thought were very meaningful and explainable ways, but the market has behaved the way the market has behaved. What we think is most important is we provided an outlook to all those that listen to us today that is substantially identical to the outlook that we provided for our 08 for the last 6 to 9 months. So the fourth quarter has not changed our outlook for 08 for the company in any meaningful way from what we've announced before.
Okay, now there are two important divisions here. On your conference call today, one of the ones that I like, the engineering construction division, you said that you did not think there would be an improvement in gross margins in 2008. Can't you read into that some people's disappointment?
Well, that's identical to what we forecasted for that division for the last at least 6 months. And the issue there is we believe that we're very close to, if not leading the industry in terms of the margins that that business enjoys. We've had meaningful margin improvement in 06 as well as 07. And however, what we've said, and we've said this for at least the second half of 07, is that we think those margins are sustainable in 08, but we're not forecasting that those margins will improve again in 08 over 07. But once again, industry-leading margins.
All right, let's step back for a second. Obviously, the day-to-day was simply horrible. I got my head handed to me. I felt miserable. You own stock. You obviously couldn't feel good. It's one of the worst days that I've had managing my charitable trust because of the stock. What's the longer-term view that would make it so we don't think that Foster Wheeler is done, over, finished, and that there's really nothing left to the infrastructure story?
Well, what I would say, Jim, is I would focus on the overall. The company announced an all-time record year, second consecutive record year. Earnings are up 50% over 06. EBITDA is up 48%. We're sitting on $1 billion of cash, and our backlog is up 30%, even though our revenues are up 27% over 06. Our outlook for 08 is identical to what we said before. We expect growth to continue. We expect both business groups to have meaningful EBITDA improvement, while the Global Power Group also enjoys meaningful margin improvement. Our fundamental outlook for Foster Wheeler is the same as it's been for the last 6 to 9 months. We all wish our fourth quarter would have been stronger than it was, but we think the fourth quarter was what it was for very understandable and explainable reasons.
Right. There have been, and I was looking at the history of, we've been behind the stock since it was 15. This is not the first time. You're in a lumpy business. Can you say something to our viewers who right now are completely panicked in the stock about how there have been other quarters that didn't necessarily jive with what people were looking for, but because of the nature of your long-term contracts, it proved to be one time only on a higher path to a much higher price?
Well, Jim, I'll take folks back to the end of the second quarter of 2007 when, as you'll recall, we were punished because we had a light bookings quarter.
Right.
And when I announced that quarter, I told the street that I was highly confident we would book the business in the second half. What I told the consuming public then about our bookings in the second half came true. We finished the year with backlog up 30%, even though we had a year of tremendous growth. What I'm saying is I would hope that the punishment that we've taken in the market today is similar to the punishment we took at the end of the second quarter when we had a weak bookings quarter, and what we do is we bounce back from this because we deliver our 08 as we've predicted that we will. And
don't you think that a weak bookings quarter is actually more worrisome than what happened today?
Well, in a business like this, in a high-growth market, absolutely, because we needed at the time to book this business because, as you know, we were growing it organically at the time that we had a weak bookings period. At the time, I wasn't concerned about it because I knew what the pipeline of opportunities were. As I say, when I look at 08 and I look at the positions that we have in both of the businesses, and I understand the fourth quarter very, very well, it doesn't concern me about our 08 outlook.
Excellent. That's Ray Milkovich. He's chairman, CEO, and Foster Wheeler. Here's what I think, everybody. I think there's going to be some downgrades. I think there will be more people who are disappointed. When you get a stock down 12, 11 points, that means something's lurking. Someone's going to say something negative. I think that this stock could still see the low 60s, maybe even the high 50s. I'm not walking away from it. I cannot blame anyone who does, though. Stay with Mad Money.